So today we're talking about unit trust, and a unit trust is a pooled investment fund. It brings together money from many investors to purchase a variety of assets. Now the key advantage here is diversification. By pooling assets, even investors with smaller capital can get involved in a diversified portfolio, something that could be cost prohibitive if done individually. So for those of you who are new to my channel, as I imagine all of you are, my name is Justin. I'm a former financial consultant and now I am a financial technology engineer. What that means is I build financial platforms that are used by businesses and some platforms in the consumer space as well. So I'm very close to the industry, having worked on both the consultant side, giving advice, and also working as an engineer, building the systems. Now, although I consider myself to have a very strongly informed opinion, on this channel I am just presenting information. I am not giving financial advice. How does it compare to other investment vehicles like individual stocks or exchange traded funds? Well, unit trusts tend to have a more actively managed approach, meaning a fund manager makes decisions about asset allocation. In terms of trading frequency, unlike exchange traded funds which can be traded throughout the day, unit trusts are priced once a day at their net asset value. This means real-time trading isn't an option. Now, one aspect that typically comes into question is the fee structure. Unit trusts typically have higher fees compared to exchange traded funds, including an initial charge and higher ongoing management fees. Now, these fees can be broken down into three categories. You have the initial charges, so one-time fees when you buy the trust, management fees, so these are ongoing costs for managing the assets, and exit fees, charges you may incur when selling your units. Now, unit trusts are available in various risk profiles, from conservative funds focusing on bonds and fixed income, to aggressive funds that aim for higher returns through riskier assets like emerging market stocks. In the UK, we have a plethora of unit trust providers, each offering something unique. Now, I'm not going to go through who some of these are, because similar to what I said in my exchange traded funds video, I have done work for some of these. I don't want to come across as having any bias, so I'm simply not going to mention who the providers are. But what I will do is tell you where you can actually buy a unit trust. So some of the unit trusts in the UK cover different sectors, from technology to healthcare, and some are even in the sustainable investment option sector. And these serve various investor needs and objectives. Before you invest, due diligence is crucial. This means studying the trust's past performance, understanding its investment strategy, and assessing its risk profile. These providers come with unit trusts that have different strategies behind them. Some are more income focused, some are more focused on growth, and you have some that are more balanced, just like other investments. So, depending on which strategy they're choosing, you might find a unit trust that's focused on income, providing regular dividends and stable returns. You may have another that's focused more on capital growth, that might invest in more riskier, yet potentially more lucrative assets. Now, what I like about unit trusts is the fact that they're regulated by our financial authorities here in the UK. So there's a lot of transparency and you get that security as an investor, because they're required to disclose information such as fees, risk factors, and performance history. Now, I always give my caveat: past performance is not indicative of future results, because it isn't. Still, it's quite good to see how a fund's been performing over the last 5 to 10 years, to have an idea of what sort of decisions they've made in the past and what they're looking to do in the future. The information I give is always UK centric, but what I like about unit trusts is that they can focus on individual geographical regions. So you can get a unit trust that's focused on emerging markets, one that's focused on European equities, or one that's focused on US corporate bonds. So these allow investors to gain international exposure without having to navigate foreign markets themselves, which I think is quite handy. It saves you a lot of time as well. So when talking about risk profiles, I said some of these could be balanced, so come with a mix of stocks, bonds, and sometimes alternative investments like real estate or commodities. Sort of like a one-stop shop for an investment solution. So if you're interested in investing in these unit trusts, you're probably wondering, where do you go from here? One of the most convenient ways to invest these days is through investment apps. I've mentioned these before. I do have some linked in the description below. I'll give you just a brief overview of how these work, because these investment apps offer an intuitive user experience. They have an easy sign-up procedure, and they offer comprehensive portfolio tracking features. In other words, you can log into the app and see how your investments are performing. And they make it incredibly simple for both novice and experienced investors to buy and manage their unit trusts. I must also mention the traditional routes that are still prevalent and reliable. So banks, financial advisors, brokerage firms, they offer a wide variety of unit trust options. And though you're not getting the same instant access that you will get through an app, level of personalized guidance can be invaluable. I should also add that with these traditional routes, you may find that these advisors do offer an app and instant information, or maybe it's available through a website. And there are online brokerage platforms. Now typically those go hand in hand with an app, some are online only. It's like some apps are apps only. And here you have the freedom to select from an extensive list of unit trusts based on your own research or recommendations from your financial advisor. One thing I should say is the fact that none of my videos are sponsored. I don't have any sponsors, just a new channel. But in my description, you'll see links to various investment platforms. Now, some of those links have referral codes. And if you were to use that referral code, the benefit to you will be the fact that you may receive a free share, you may receive a welcome bonus, or you may receive reduced trading fees. And so those are all outlined in the description below, and there for you to enjoy. Also, don't forget, consult with a financial advisor if you're unsure about your investment choices, because knowledge is your best asset. And understanding the nuances of unit trust will put you in a good position to make informed decisions. That's what I'm here to help you do. I want to give you the information so that you can make an informed decision, like I do for my family.